Welcome to Inside Economics. I'm Mark Zandi, the Chief Economist of Moody's Analytics, and I'm joined by a trusty co-host, Marissa DiNatale. Hey, Marissa.
Hi, Mark. How are you doing?
Our other co-host is AWOL. I heard he's in Bermuda.
He is. Poor guy.
Yeah,
on a business trip.
no less.
I know.
Yeah, what's that all about?
I don't know, but how do I get that gig?
Have you ever been to Bermuda?
No, I have not. Have you?
It's a nice spot. It really is a nice spot, especially, I know you live on the West Coast, but if you're here on the East Coast,
Yeah.
It's pretty easy to get to. Although this time of year, it's a little iffy. I know there's no hurricanes out there at the moment, but it's a
I
little
think
iffy.
there is a hurricane out there, actually.
There is a hurricane out there?
Yeah, I think there is.
Oh.
I mean, I don't know if it's near Bermuda, but
it's supposed to cut that way, I think. I track these things closely. I'm making sure it's not coming towards Florida, so.
And this is Justin Begley. Hey, Justin.
Hey, how's it going? Sorry to cut in there.
No, not at all. I know we need another voice with Dr. DeRees away in Bermuda. Oh, so there is another hurricane out there.
That's what I've seen, and they say it's too early to tell, but it looks like it's going to be cutting up along the East Coast, so certainly could head towards Bermuda. Hopefully, Chris will get out in time.
Yeah. Oh, he's a lucky guy. He crypto portfolio is booming, stock portfolio is booming. He's like gold. You just, I think I'm sure
dodge hurricanes.
Booming. Yeah. Gold is booming. That's the other voice, Brendan LaCerda. Hey, Brendan.
Hey, Mark. Thanks for inviting me.
Yeah, you guys, you can't, wait to get on. You got to, jump the gun here. But I'm
excited to be here today. It's been a while.
It has been a while. So, Justin, you're sitting in, where are you? You're in like Tallahassee somewhere, right?
Yes, right in the middle of the Panhandle.
Right. And so you keep a watchful eye on all storms, low pressures coming off the African coast, I assume.
About a year ago, I wasn't paying as close of attention because I was in an apartment and my wife and I could just be like, we're out of here, go up to our family in New York or, shift to one way or the other. But we just bought a house and I am like an anxious bean right now. I am always on looking at the hurricane tracker, making sure nothing's coming our way.
It's funny how that happens. Yeah. It's funny how you become a property owner and your whole perspective on the world shifts.
Oh, it does.
Yeah, that's funny. And I have a home down there as well, so I've come to be a pretty good observer of those low pressure coming off the African coast. But I haven't. Mm-hmm. It's been kind of quiet, at least for Florida. It's been kind of quiet this go around so far.
It seems that way.
Wood, I guess, right?
It seems that way. I mean, we're 10 days into October. We're by November, you're supposed to be in the clear. So we'll see. Yeah. Hopefully we get there.
Well, let's see how it goes. Okay. Well, it's good to have you guys on. And it's apropos because you guys are focused on this federal government shutdown and all things related to that. And I do want to come back to that and talk that through. But before we get there, let's talk about the data. And I guess the first question is, what data? Given the government shutdown, we don't really have we're not getting anything from the federal government. Although did I just read that the Bureau of Labor Statistics is calling workers back to construct the Consumer Price Index, the CPI?
Yeah.
Is that right, Marissa?
Yeah, because they use Q3 CPI to calculate the Social Security adjustment each year. So if they don't have September, they can't do that. And that would delay the calculation of the cost of living adjustment. So they are recalling just the people that create the CPI for September. So they're going to try to get September out by the end of the month, is what they say.
So just so I understand, so for the COLA increase, the cost of living adjustment to Social Security benefits, they use the CPI inflation rate year over year through the third quarter of the preceding year.
That's right.
So the third quarter ends with September, so they need that September data. And I think by law, they have to set that by November 1, I think. Mm-hmm. And so that's what is behind this recall of the workers. Do you think they're going to release that data to the public?
Yeah, I think they will.
They will. That's next week, isn't it? Like next.
Oh, I don't think that. Well, I don't. They may not release it next week as scheduled. They very well may not. Actually, I kind of doubt they will. But I think that they will release it once they've calculated it probably by the end of the month, I think. What do you think, Justin? Is that your understanding?
That's my understanding. I think it's a very low chance that it comes out Tuesday, but because they really haven't been doing any work to survey the prices that have changed. But once they're all back, hopefully this week, then they'll have about 2 weeks to finalize this thing. And so, which is actually good for all of us, especially economists, because we have a variety of labor market indicators that we can look at from the private sector. Inflation is kind of that's like a shot in the dark. You might be looking at, used vehicle prices or maybe house prices or whatever, but it's very hard to compile together a CPI basket to have like a private sector version of inflation.
Although, how good a number is it going to really be? I mean, even before this mess, I think 35% of all the goods and services canvassed by the BLS were not actually canvassed because of a budget cuts and cuts to staff. They were imputed. So what percent is going to be imputed this go around? I bet stands reason it's going to be.
Yeah, although prior to the shutdown, they did hire a bunch of price collectors again.
Oh, they did.
Yeah, they did. And I don't know if that will, I don't know if that will happen. If those people will be employed fast enough to affect the September number, but this happened about a month ago that they rehired a bunch of people to check prices.
Yeah, but can you imagine they have to be onboarded, trained?
Yeah, that's what I'm saying. I don't know if it will affect the September number, but at least that's a step in the right direction.
Right. Well, here's a great example of why these numbers are so important. I mean, this is real money for seniors, right? I mean, this goes to to their benefit next year. How big an increase are they going to get? So you can't, if you don't measure it accurately and on time, it has all kinds of implications. Okay, but let's before we get to the government shutdown, as I said, I know we've been working hard to identify all the various private data sources that are out there that have bearing on the economy, all these labor market indicators, and there's a whole slew. Before I went through this exercise of trying to identify them, I didn't realize how many there are. There are all kinds of private data sources out there, and I know we're working hard to bring them into one place and try to interpret them. Justin, I know you've been kind of spearheading that work. You want to give us a sense of what those sources are and what they're saying about the economy?
Sure. Yeah. So we've really identified a number of labor market indicators because, of course, that's one of the more important things that economists are looking at right now, particularly as the Fed is in this monetary policy transition, is really looking closely at the labor market, is looking closely at inflation. And so there's two types of private sector data that try to target an estimate of non-farm payrolls, those being on the private sector side from ADP, their kind of private sector estimate of payrolls. And then there's a newer data source that has a much more limited history, but is nonetheless an interesting compilation of data from Revelio Labs, who, of course, their chief economist came on the podcast very recently to describe the data. And where these two are trying.
Was it last week?
I think that was last week.
Was it last week?
Yeah, it was our jobs day. It was our No Jobs Friday.
No Jobs Friday, right? Exactly.
Yeah.
That's right.
Sorry.
Interestingly, each of these are actually sending off slightly different signals. If you look at ADP is showing pretty much a lot of deterioration in the labor market. The labor market has shed jobs for the last 3 or so months, according to the ADP report. This is on the private sector side. Revelio Labs, they suggested that September had a 60,000 job gain. Nothing spectacular, but if you look at kind of the net change in total payrolls over the last year or so, it's remained remarkably stable. Soft, but altogether stable. So those are kind of sending to slightly different signals.
Yeah, I think LinkedIn also has its own estimates, doesn't it? I mean, Revelio uses LinkedIn and other professional sites, but I think LinkedIn also does as well. And I think they came in around 50. I'm speaking from memory, so it might not have it exactly like 50, 55K, something like that. Mm-hmm. Okay. But there's others as well, right? I mean, sure. All kinds of, you want to just, and I know, Marissa, you've also been looking at unemployment insurance claims. So we'll come back to that in a second. But anything else, Justin, in your perusal of all this private sector data that is helpful in trying to understand what's going on?
Sure. Yeah, I'll just kind of run through a list.
Yeah.
I mean, Indeed, the job posting
Indeed.
site has a
Mhm.
job posting index that's largely shown that job postings have been on the decline for quite a while now, but suggesting that labor demand is softening. The ISM surveys, both on the manufacturing side and the non-manufacturing side, release employment indexes. Both suggest that that employment there is softening. All the regional Fed surveys also have employment indexes. The Fed, of course, is funded by a different mechanism, so these are not going to be impacted by the government shutdown. Those, depending on which one you look at, I think we've kind of assessed that it's that the trend is largely stable in manufacturing and non-manufacturing employment, kind of measured by regional Fed surveys. There's also the Challenger report, which looks at layoff announcements. Now, of course, announcements do not always translate into direct layoffs, but nonetheless, layoff announcements have been rising, suggesting some, at the very least, deterioration in the labor market. And then there is the Conference Board, which releases expectations from CEOs on their intentions to hire more employees. And then also from the consumer side, there's the famous labor market differential, which measures the net percentage of consumers who see jobs as plentiful in the labor market versus those that are hard to get. And that's actually a pretty good leading indicator of labor demand and the unemployment rate. It seems like consumers have a pretty good idea of what their job situation is like. Both of those, both the CEO survey from the Conference Board and the consumer survey, are pointing to a sliding labor market. And then finally, the NFIB has small business hiring intentions as well. Those have been remarkably stable in recent months.
Just for the listener, that's the National Federation of Independent Business, NFIB.
That's right. So they're really kind of most of their membership consists of businesses that have 50 or fewer employees, but nonetheless still important for the overall labor market because they hire a lot of people en masse.
And I missed, what did it say? What did NFIB say about jobs?
The hiring intentions have been pretty stable over the last couple of months.
They have been. Okay.
But it's a decent leading indicator of future hiring.
Got it. And Marissa, what about the UI claims? Because I know you can calculate them based on what the states are reporting from their own labor departments.
Right. So normally every Thursday morning, we get national UI claims from the Employment Training Administration, which is a branch of the DOL. But the states are still, but it's a compilation of state level data, right? And the individual states are still putting out their UI claims data. So our colleague, Matt Collier, has been aggregating these for the past couple of weeks. That was released this morning. There's a few states missing, including Massachusetts today, which is a relatively big state. It could maybe move the needle on this, but it showed that in the week ending October 4th, UI claims rose by 10,000. So from 224 in the week prior to 234 last week. So that's still, it's up, but it's still pretty low. It's not a concerning number.
Right.
And Justin had mentioned the Challenger report that showed that, intended layoffs fell a bit over the month with their latest data. So it's still showing that, hiring has stalled, but we're not seeing these massive uptick in layoffs yet.
As I recall in our conversation with, I think it was Lisa Simon, the chief economist for Revelio Labs, we kind of went around the group and asked what was kind of your estimate of so-called underlying monthly job growth. So abstracting from all the vagaries of the data. And I think you said 0 to 25K, somewhere in that ballpark. Is that right?
Yeah.
Given all that's happened in the past week, all the data you've looked at from private data sources, including today's UI claims, has that changed? Is it still 0 to 25?
No. And, there's another, I didn't know this. Actually, I had dinner with some clients the other night and a client mentioned this to me. So I looked it up. The Carlyle Group, the big private equity firm, is putting out their own employment estimates based on all of the companies that they have in their portfolio. I don't know if you guys saw this.
No.
So they came out the other day with an employment estimate for September, and that was plus 17,000.
Oh,
and they bench it to the payroll survey to try to make it comparable. And I've also been looking at the relationship between private sector payrolls from BLS and Revelio and ADP. If you take the average of Revelio and ADP over the past 5 years, there's a 95% correlation with the payroll survey. So if you just kind of average those two numbers,
Right.
I think it's a pretty good approximation. And that would be right in line with like what Carlyle Group put out. It's kind of, to me, it's all saying somewhat the same thing, which is that we're maybe adding jobs, but not very many. So yeah, I think the underlying pace of job growth is probably somewhere between 0 and 25K right now.
And that's pre-revision because Revelio gets revised.
That
ADP
gets revised. That's right. And so does ADP. That's right.
And they're all recently getting revised down as they get more data, more information. Hey, Justin, why aren't we doing that? If Carlisle's doing it, we should be doing that, shouldn't we? Yeah, let's talk. Let's get Dante on the line.
I suppose we should.
Dr. D'Antonio. Oh, come on. We should. And by the way,
I'll knock on his door.
Well, I'm going to knock on his door. I mean, we should do that as part of this work.
that would be more effective.
Yeah. Immersive, that's exactly what I did to get to my underlying rate of job growth is average ADP. And it was 50, I think 50, it's actually more, it's 15K, but of course, ADP does not include government. And we know government is down in all likelihood.
Yeah, right. Down. I'm just talking about private sector. I just looked at private. Yeah.
Revelio, is that private sector too, or is that include government?
No, it includes government, but you can take government out to make it comparable with ADP, right? Oh, okay. So that's what I did.
I see. Got it. Good. Okay, so Brendan, just to bring you into the conversation, based on all the things that you're looking at, where would you put underlying monthly job growth at this point, if you have a view?
Yeah, plus 20,000, weekly positive at best.
Weekly positive. And Justin?
I think I'm around there as well. Maybe even a little bit higher, just depending on, once we kind of get away from the federal government layoffs, maybe something around 30,000, but again, still weekly positive.
Well, now that I have you, because I know you've done some work here, how many jobs have been lost at the federal government level, and how many more are coming?
I think something like 95,000 have been lost. I think it's in that ballpark. And October, when we do get those numbers, presumably in November, assuming that everything is back to normal, we're probably looking at another 80 to 100,000 removed from the federal payrolls, because back earlier in the year, when the federal government started offering these voluntary buyouts to workers, it was estimated that around 80,000 federal workers took it, but they were able to stay on the federal payroll until the end of the fiscal year, which of course just ended, which means that by October, they're no longer going to be counted as employed by the federal government. So we should probably see a pretty large reduction in federal government payrolls as a result of that.
So you think, would you say how many are going to be lost in October because of the end of the?
My estimate's about 80 to 100,000.
80. Oh, so we could see a pretty significant negative number in the month of October.
If I'm correct in the way that those federal payrolls that were kind of categorized as bought out are accounted for that way.
Right. Got it. Okay. Yeah, I think we're between 0 and 25 at best. I mean, that's pre-revision. I think with the revision, we're 0. We could even be negative. It's not big negative, small negative.
I'll say I base my view on really weak hiring rate in the JOLT survey. The last print we got going into this. I mean, that hiring rate's back at 2009, global financial crisis levels. It's real weak.
Recession level. Yeah. Okay.
Hiring rate recession.
Okay. So before we move on to the government shutdown and all the ins and outs of that and its implications, any other private sector data that you didn't mention, Justin, that you think we should be looking at? I mean, there's a whole slew of. You can look at Broadway attendance, air traffic through the major airports, port traffic through the seaports. Visa puts out an index, MasterCard puts out an index, JP Morgan puts out Bloomberg puts it. There's like a gazillion. Anything out there that you find especially informative in trying to understand what's going on in the broader economy?
Yeah, I mean, I will say there are a lot of data sources out there. There are a lot of estimates of how the economy is doing. I'm sure many of them are fine. It probably is just better to stick to the more tried and true indicators that have a good track record of tracking well with the government statistics. So like things like ADP, for instance, you look at like the just the general trend in private sector payrolls estimated by ADP and private sector payrolls by the BLS. It's very close over the long run. So I think that's helpful. But there is like, just to touch on another data point, since we're due to get it next week, but probably won't. Chicago CARTS data, which is kind of like produced by the Chicago Fed, an estimate of retail sales ex auto has been pretty good at estimating retail sales. So, just another data point that I'm pretty sure they get it from like private sector credit card data. Something to keep an eye on as well.
I'll throw one more data point out there.
Uh-huh.
For those of us focused on trade, it was a little bit of a bummer that we missed the international trade numbers this week. But we did get the Canadian trade numbers. So we do know that bilateral relationship. So at least have that piece of the puzzle. And we did see Canadian exports to the United States fall slightly. So looks to be shaping up that we're still seeing deterioration on trade through August.
Got it. Yeah, Marissa, are you any gems out there that you haven't mentioned that we might want to take a look at?
I don't know if this is a gem. It's just another data point, right? Because now all these companies are coming out of the woodwork with their estimate of what jobs or the labor market is looking like. I think it was Bank of America said that they looked at their deposits and they can see how many people are collecting UI, how much UI is going into bank accounts, and people losing their jobs. They can see the end of, automatic payroll. And I don't remember what the number is, but they put out a statement that they see that it seems like a lot more people have gotten UI over the past month since they looked at it a month ago.
I guess, Justin, that might be consistent with the federal government workers coming off their deferment, right? Because if they start looking for work, couldn't they, or I don't know, what are the rules? Does anyone know the rules there? Could they apply for UI?
You mean the delayed retirement or or the people furloughed from the shutdown?
No, the delayed retirement, the 100K or so folks that are going to lose their jobs in the month of October, or they come off.
Yeah, I think September 30th was their last payday, right?
Could they go on UI after that? Do you know?
I think so, yeah.
If you voluntarily left? It's murky.
Okay. Yeah. Okay.
Not sure.
Anyway.
Yeah, man, I'm not sure. And also, I guess there's a real question as to like how many of those workers ended up finding positions in the private sector since taking that buyout, because it'd be weird to think that like 80,000 federal workers just sat on their hands from February to September. So even if they were still collecting a check from the federal government.
But all this conversation we're having highlights the importance of getting this government data, particularly at this point in time, right? Because the labor market is weak. The economy broadly is on the soft side. And, we got a Federal Reserve that's going to meet here in a couple of weeks to make another decision about interest rates. And we had the Social Security. We had the conversation around Social Security and the COLA payments. So a lot going on here. We're just not getting any data because of the government shutdown. But let's now turn to the shutdown. And Justin, can I ask you, what's the state of play here? We're sitting here on Friday, October the 10th. I think how many days in are we now? 10, 11, 12 days? 10 days in to the shutdown. What's the state of affairs? And how do you handicap how this thing's going to play out?
Right now, we're gridlocked. I mean, the Senate has gone home for the long weekend after voting pretty much every day on two bills, one being the clean continuing resolution, which would basically just extend existing or previous funding, for the next 7 weeks on November 21st, that passed in the House. That's the GOP-backed bill. That's been voted on every day, keeps failing. It needs 60 votes. It's getting at most 54 right now. The Democrats have also proposed their own bill to extend funding till the end of October. That would do a host of other things in addition to extending current funding levels for 4 or so weeks, which would include a permanent extension of the expiring ACA premium tax credits. that will expire at the end of this year, and also some repealing of the Medicaid funding reductions in the One Big Beautiful Bill, and then putting some limits on the executive branch from rescinding congressionally approved funds. Those last two are basically non-starters with Republicans. There's probably some room to negotiate on the ACA premium tax credits, but that's where they're gridlocked right now. There's not really been at least any public meetings. There's some conversations about kind of behind the door talks about some negotiating some of these things. Republicans have basically said that they'd be willing to negotiate on the ACA subsidies after a continuing resolution is passed, but they will not talk about a permanent extension in a short-term funding bill. And so that basically leaves us stuck right now where Democrats, Republicans just aren't really talking to each other. There was, interestingly, not to ramble on too long here, but there was interestingly a show of bipartisanship last night when the Senate approved the National Defense Authorization Act for fiscal 2026, which kind of sets a budget framework for the Defense Department. So that was pretty interesting. It doesn't do anything for the shutdown, but at the very least shows that maybe there could be a bipartisan compromise coming soon. We just haven't seen that yet on the fiscal 2026 budget.
The thinking, at least my understanding of the thinking, has been that the Republicans and Democrats would come together by October 15th. That's next Wednesday, I believe, because that's the day the military gets a paycheck. And if they don't get a paycheck, that would be politically untenable. And the parties would, at that point, say, okay, let's figure this out. Let's reopen the government. Is that still, and I think that's kind of sort of been our baseline thinking, what we've incorporated into our own projections of the most likely scenario. Are you still holding to that, Justin? You still think that's the case?
That is our baseline. Our baseline was for a 2-week shutdown with reopening forced by the military pay being provided. I think that still is a reasonable expectation, except for the fact that now the Senate has gone home, so it makes it a little bit more murky, though certainly they could be called back in for a vote. The thinking around that is that military pay misses have never happened for a shutdown. They've always found a way to either reopen the government or fund military paychecks when there's been a lapse in funding. So it's really hard to see if either they jump over that deadline of October 15th and don't provide paychecks to the military, or they pass a bill that is only to provide military paychecks and nothing else. It becomes very hard to see what the end date of this is. What would be the next forcing mechanism? On the one hand, there's today is a payday for federal employees. They're going to get a partial paycheck for work done largely in September. By October 24th, that's going to be their first full paycheck missed. And so, that could be the next forcing mechanism. But, and then after that, November 1st is when open enrollment for the ACA starts. So that could be another. But it becomes very hard to see, what, if not October 15th, what is the date that Republicans and Democrats say enough is enough? Let's reopen this government. And so, for now, we'll stick with the baseline. But after that, the water just become very murky.
What do you think, Brendan? I mean, what do you think of our baseline assumption about October 15th and what happens if we blow through that? And do you think we will blow through that?
As you mentioned, it's a major sort of roadblock, guardrail, whatever you want to call it, the Rubicon to cross here. As Justin noted, it's very politically perilous, I think, to not pay armed service members. That being said, since the shutdown started, I think my view is that this may go on for longer than we previously expected. So the risks are clearly leaning towards a much longer shutdown. I think that reflects sort of two facts. One is I think that the Democrats believe that their hand or their position is growing stronger, that they have some traction with this ACA premium subsidies issue, because we have the November 1st enrollment, because it has this urgency, because we're talking about health insurance premium increases. That's very visceral for a lot of households. They're getting traction with that. I think the other problem is that I think Republicans' original position that, we just want to pass a clean CR. Democrats have used that argument before. It's very effective. It's like, hey,
CR, continuing resolution.
A continuing resolution, which basically says, let's just keep the government open under, current budget, and let's work this out. And the Democrats have used that argument very effectively in previous shutdowns against Republicans. As I've thought about, we've talked about this, but I've thought about it more and more, and I think the trouble with this strategy is that a clean CR is an argument for, business as usual. We should stick to, the orderly process. But, the way Trump, sort of prefers to operate, I guess, not sort of obeying the typical like DC norms, or he seems to, to his own credit, inject volatility into a lot of debates and sort of ride that volatility. So I think trying to make this argument that we need business as usual is hard when on the other hand you have Trump saying if you don't agree with me, Russ Vought and I are gonna fire huge portions of the federal government. There's a contradiction there. And then on the other hand, you have the Democrats making this argument about the premium subsidies, and they've kind of worked themselves into a position where they can't back down, because you see sort of, I think, this consensus building amongst Democrats that if we don't stand up now, when would we ever stand up? So I think that's sort of the point Justin was getting at, is we're not seeing any progress towards any resolution, because the public polling's still pretty even. Both sides still feel like they have like the upper hand in this, like they could win the debate. So potentially, leaning towards a month-long shutdown. But as Justin said, October 24th then becomes the next biggest deadline, because that's when all federal employees would miss a paycheck. And then after that point, you start to become worried about, essential workers not showing up to work anymore. That sort of creates another forcing mechanism, like we had before with, TSA screeners, not showing up to work. You worry about airplanes and airports functioning properly. Those sorts of issues start to come to the fore.
So I'm going to opine here in a second, and I'm taking everything you're saying in and incorporating that into my thinking. But before I do that, Marissa, do you have a view on this in terms of the October 15th baseline, the end of the government shutdown, or whether it'll extend on?
Not particularly. I mean, I think the baseline makes sense. I also think they could just agree to pay the military and nothing else. And that seems like a very plausible situation too. And then, as Justin said, then it's not clear where it ends after that.
Well, my sense is the odds are that we're going to blow through October 15th. I mean, it just feels like to me the Democrats have an issue that's resonating. You can see it in the polls. People want to be able to hold on to their help, the ACA subsidy. And this is also in the context of the Medicaid cuts. That's also got people, very nervous, about future insurance for lower income households. And I think it's resonating. I was visiting clients. It got dark, didn't it, in my room?
We did just get dark.
Maybe the sunshine stopped coming through.
Hurricane.
Yeah. Oh, please. That's what it felt like the lights went out. But I was in Florida speaking at a number of different functions. It seems like everyone goes there for Orlando. I was kind of in Orlando region for a few weeks, and I was in the car going to one of the speeches and listening to a talk show, a local talk show. This is Florida, right? Orlando. And the people that were calling in were very, very nervous, angry, upset about losing those subsidies. And they had done the calculations. They go, my premium is X. If this happens, my premium is going to be Y. And I'll tell you, I can't afford that, so I'm going to go without health insurance. And you could feel kind of the angst and the anger building. So I think the Democrats actually have something that resonates. And then the other thing politically, and here I'm an economist playing, political interpreter or operative, but I'll do it anyway because we have to come up with an assumption. I think when the president starts saying that he's going to fire all these government workers, or that this is an opportunity to make big cuts in the government employment staff. I don't know. That doesn't feel. And then also cutting funding for different infrastructure projects to Democratic states like New York and California. I don't think that works, politically. I think it does just the opposite. At least that's my sense of it. It gives the Democrats, further justification for kind of holding on here. So my sense is this thing's going to blow past October 15th. And as you say, Justin, after that, it's not clear. I think the forcing mechanism is something's got to break. What happened in 2018-19, that was the longest shutdown in history, 5 weeks under President Trump in his first term. I think the narrative there, and I think it's correct, that what brought that to an end was air traffic controllers just weren't showing up for work. TSA workers weren't showing up for work. So people, their flights were getting delayed or canceled. The air traffic system was getting mucked up. Things were breaking. And that's what forced President Trump's hand and that caused him to settle on the shutdown. That's what's I think going to have to happen here. We're going to go to a place where something is going to break, and that's when it's going to force the hand. That could take some time. That's not 2 weeks. That may not be even 4 weeks. That could be. We could set a new record here, 5-6 weeks. I don't know. What do you think, Justin? Does that resonate at all?
Yeah, I think that's exactly the sentiment that I have been kind of carrying the last couple of days. I mean, there's a couple near term things that could be a breaking point. Like, for instance, there's already a ton of flight delays. So it could be that the FAA concerns mount a little bit more quickly. Of course, the OMB director, who Brendan mentioned earlier, Russ Vought, he I'm sorry, actually, it was the Transportation Secretary, Sean Duffy, had said that if any FAA workers walk off the job, for unqualified reasons, then they'll be fired. The problem with that is that, like, we need FAA workers. That's just not like something we can, the government can really handle. It's too painful. And so, I think that could be a forcing mechanism. I'm flying on Wednesday, and I do not want my flight delayed. And so, hopefully, even for my own interest, I can feel myself getting more tense about my travels. And I think the more that the government stays shut down, the more stuff like that's going to happen. Another thing to keep in mind are actually two federal welfare programs.
Can I say, Justin?
Oh, sure. Go ahead.
I'm traveling a lot on airplanes, and I wasn't tense until you said you're tense. Now I'm tense.
Oh, well, it's funny.
I was okay until you said that. Yeah,
I know. I've had a couple of colleagues reach out to me here at Moody's saying, "I need your expertise when I'm traveling soon. When's the government shutdown happening?" I'm like, "Well, man, now I'm really having to put my confidence in our forecast here."
Sorry, I stopped you. Go ahead.
No, it's okay. There's actually another thing to keep in mind, and I was looking at this week. The nutrition assistance for women, infant, and children with the WIC program, who a fair number of millions of Americans rely on, that funding actually dries up in just a few days. They don't have all those benefits will start to end probably by mid next week. And there's been some talk of states stepping in to fund the gap, but that's not sustainable. And not every state can do it. And then the Trump administration has suggested they might try to backstop the program with tariff revenue. That's legally dubious. And so, that's another potential issue that might result in some, in Congress getting together to extend funding. And then this is a longer term thing, but by December, SNAP benefits are going to run out because the contingency fund is going to dry out. And now we have, I think it's like 40 million Americans are on SNAP.
SNAP is food assistance. Yeah.
That's right. Yeah. Supplemental Nutrition Assistance Program. All those food stamps that people get. I think like 40 million Americans rely on these. So all of these things are going to start boiling up and increasing the pressure cooker on lawmakers to get together, which might result in a deal that extends the ACA subsidies. But I actually think that the Democrats have a reasonable off-ramp here, because even though right now the president certainly could throw this whole thing for Republicans by, saying we're going to lay off all these federal workers and we're going to cut all these Democratic funded projects, that could happen. But at the end of the day, it's still the Democrats that are demanding something that is not currently in law. Republicans just want something that's clean, which, as Brennan had said, Democrats have always supported for continuing resolutions. So if Republicans can keep their messaging together and allow for these pressure cooking events to occur, and also at the same time maintain their promise to Democrats that we will actually negotiate with you and allow for a floor vote on extending the ACA premium tax credits, then that provides Democrats an off-ramp to avert any blame that might come their way as all these things start breaking by saying, okay, we got what we wanted. We're actually going to get a vote on the ACA premium tax credits, and we're going to reopen the government. So that's one way this could play out.
Got it. Okay, so let's talk about the economic consequences of all this. And kind of the way I've thought about it is if it's a week or two, which has been our baseline, by October 15th, no big deal. We've been down this path many times. When people are going to get paid paid on time, it's new, there's no upside to it for the economy, but the downside here is probably doesn't even show up in the data to any significant degree. If it's 3 to 4 weeks, and by the way, that is increasingly less likely it's 1 to 2, but that's the kind of the impact. 3 to 4, it becomes a deal. People aren't getting paid, right? And that's got to have, for some of those folks that don't have a lot of savings or other financial cushion, it's going to have some impact on the way they behave. And they of course, they don't know how long the whole thing's going to last and how long it's going to be before they get their next paycheck. They may be worried that they might get fired. That the administration has threatened that, so they're going to become much more cautious in their spending. And then federal government contractors that service the federal government, they're not doing their work, and they're not getting their pay. They're not making revenue. They're going to start cutting jobs, and it starts mounting. We start getting some macroeconomic. It starts showing up in the data. If it's more than a month, then it's a deal, because at that point things do break. Government services just aren't going to get done. We talked a lot about TSA because we're personally affected by that, but we're talking about lots of stuff. NOAA tracking those hurricanes coming across from Africa, FDA approving pharmaceutical plant, SEC doing the paperwork necessary for on and on. The parks that are closing, so forth and so on, and all those other sources of income support that aren't getting, like the WIC program, where it's not getting paid. That's a deal, and that becomes a macroeconomic problem. Let me turn to you again, Justin, because I know you've done a lot of work in this area. We've done a lot of work together in this area, going back a few years. Does that sound about right to you, the way I just articulated it? Does that make sense to you?
Yeah, that's entirely correct. We did some modeling a couple weeks ago where, if the government is closed for 2 weeks, it shaves about 0.3 percentage point, a little less than 0.3 percentage points off of annualized real GDP growth. That's largely from productivity losses. You stop work for 2 weeks, you have some losses to productivity. But you're right, you get into something like a 8-week shutdown, 12-week shutdown. Now we're talking about extreme productivity losses, disruptions in the private sector, federal contractors having to lay off primarily kind of their hourly workers as their cash flow dries up. I think, though, we haven't really seen this too much in previous shutdowns because they've been pretty short-lived. You start getting consumers start responding by losing confidence, investors revolt, and there's some more turbulence in the stock and bond markets, just from the pure perception of political dysfunction, and then all these other disruptions that you had mentioned. So yeah, these consequences can become pretty big pretty fast if this endures for a sufficiently long period of time.
That's a good point. I mentioned the financial market effects. At some point, bond investors are going to say, what the heck's going on? This is going to have macroeconomic consequence. What does this mean about governance and the ability for the government to do the most basic thing, and that's keep the lights on? What does that mean? Brendan, anything to add here in terms of the economic consequences?
Yeah, I think you noted it, that the the macro consequences and costs, I think, start become much more nonlinear after 1 month. As you point out, like the first 2 weeks, like almost don't even matter because it's almost like everyone's just on vacation. But then the first missed paycheck happens. And I think as you point out, like people use credit cards, you can sort of smooth things out, but then you imagine like, what happens on November 1st? Like for a lot of people, that's going to be like rent and mortgage payment. That's going to be a big one. And if they have like no money in their checking account, now it's really starting to like squeeze them. And I think if we look at, we've made a lot of comparisons to the previous shutdown that went, 34 days. We should mention the key difference there was the military members were getting paid during that shutdown because the Defense Department was authorized. So that is part of the reason it went on so long. But the fact that it sort of just went past 30 days, that's when you really start running into the problem of, now federal employees have missed 2 paychecks. So now they are starting to look for other jobs. And that's why you see a lot of those like TSA folks were leaving. And it's probably not a coincidence that, that I even verified today, that is one of like the lower paying positions on like the federal pay scale. So I think you're particularly worried about, sort of the lower end of the salary spectrum, like those people jumping ship first. And that's really where you start to see those second order effects in that disruption. But if I was going to draw a historical parallel, it feels to me like this is the closest to the 2013 shutdown, when, again, the battleground, the policy debate was healthcare. At that time, it was about, the Republicans were trying to delay the ACA. Now it's about actually the Democrats trying to enhance the ACA. A president who had just started, as incumbent president, someone who had just started their second term. I was looking, consumer sentiment was extremely low. I think that also plays into it because, as the opposition party, you think maybe I can use that negative sentiment. There's a lot of negative feelings about government economic policy right now. You can try to play that, against Trump. That shutdown went for, I think it was like 16 days or something like that, a little beyond 2 weeks. And I think that sort of gets back to my baseline assumption here is that I think we're certainly going to blow past 2 weeks, but to me, I really struggle to think we're going to blow past like 30 days because of those macroeconomic consequences we're talking about. Because, you rattled off a few, but, the list goes on and on and on. Like Federal Home Loan Bank, they're not processing, mortgage, FHA compliant mortgages and things of like that sort. There's all these different sort of parts of our economic system where the government, facilitates, market operations, market activity. And when that stops, it could get ugly really fast.
Yeah, Justin or Brendan, you used the right word. I think it's nonlinear. The economic consequences, and actually, Justin, the simulations you ran with our model of the macro economy, they're not nonlinear enough. It's a linear. The models tend to be more linear, meaning, if it's a 2-week shutdown, that has the same impact as a shutdown that lasts, 3 to 4 weeks, about 5 to 6 weeks. It's about 0.1%, per week that gets shaved off in the quarter of the shutdown. I think the model isn't getting it quite right. My sense is 1 to 2 weeks, basically zero. No big deal. It goes 3 to 4 weeks, then it's about a 10. You're shaving 1 to 0.2% off per week of the shutdown. After 4 weeks, it's big time. It's we're talking much larger consequences to Brendan's point about the disruption. So we've got the model results, and I think they're obviously very useful and keeps everything consistent. But it feels like the world, particularly this world around the shutdown, is much more nonlinear than that. To Brendan's point.
Well, and just to go back to our conversation at the start of the podcast with the Federal Reserve being in this monetary policy transition.
Yeah, great point.
At a certain point, they're going to be flying blind, and then the risk of a monetary policy misstep just goes even higher. And so it's like that even adds more to the equation about how bad this could get.
And let's end this conversation around, because I want to go play the stats game. But before we do that, Marissa, let me turn to you. It's what happens if the government stays shut down through next week? Because next week includes the 12th of the month, right? This coming Sunday is the 12th. That next week is when the Bureau of Labor Statistics conducts its survey for the payroll and household employment numbers for the month of October. If we're shut down, that's not going to happen. So what happens after that? I mean, is it possible that we're going to actually never get data for the month of October 2025? Is that a possibility?
It's possible if the shutdown were to go on long enough, I think. So also going back to the 2013 shutdown, that was also a shutdown where we didn't get government data. We didn't get a jobs report. It bled into the survey reference period. I think the CPI was also delayed then as well. So I think what they have done in the past is sort of just retroactively do the survey. I think we talked about this a little bit last week too. With the payroll survey, you can do that because most of it's automated. You're getting automated payroll records from company referencing a certain date. No person has to recall something, right? On the household survey, that's different because you're calling people up and you're asking them about their activities during a specific time period. And as that time period gets further and further away, people have recall difficulties remembering what they did. On the CPI, same thing. People are out there collecting data on prices. Now we know that's going to happen, right? We know that that'll happen for this month because the White House called the people working on the CPI back, as we talked about at the top of the episode, because of the cost of living adjustment that has to happen. But yeah, I mean, you could have very delayed reports, which is probably the most likely. If what we're saying is that the government is shut down for most of this month and then reopens, I think you'd have a delayed job report. If it went on longer, something like we haven't really seen before, then yeah, you could actually miss a month of a jobs report.
Right. Well, I guess. Oh, go ahead. Sorry.
I was just back to the Fed. I was thinking about that. So it's likely the Fed meets October 28th and 29th. That's their next policy meeting, right? So it seems like they may have a CPI number because of this, edict to bring back workers on the CPI. But they almost definitely won't have a jobs number. So they're going to be doing what we're doing, is looking at alternative data sources. And I wonder, would the government, if the government is not open on October 28th, 29th, will that factor in to their decision about the trajectory of growth or how the economy is doing?
Interesting point. Yeah, great point. I mean, if anything, they're cutting rates. It just argues for continue to cut rates. I mean, markets expect a rate cut on October 28th, 29th. So they'll more likely deliver if the government shut down, for sure. Yeah. And I think I saw Matt Collier's estimate of CPI for this month, and it's more benign. I think the core CPI is coming in. It's going to round down to 0.2 as opposed to round up to 0.3. And if that's the case, that would also give the Fed more latitude to cut rates as everyone expects at the end of that. So I think everything is coming together to suggest that the Fed's going to cut rates at the end of the month. I would be surprised.
I was going to, sorry to cut you off, Marissa.
Go ahead, Brendan.
I was going to say on the point of inflation, it does get tied back to this discussion about the ACA premium subsidies. I raised this point to you earlier, Mark, in a previous conversation, but back in 2023, when they implemented these premium subsidies, the way CPI handles medical costs is they're only measuring your out-of-pocket costs. The way the CPI works, and these subsidies, when they hit their sort of peak effect in late 2023, they took 0.3 percentage points off of top line CPI.
Wow.
So one of the things is like if these subsidies go away and then it whipsaws the other way and adds another 0.3 on top of CPI in 26 Q1.
Yeah, that's right. It's the cost.
It's transitory, but it's going to be there, and people are going to people are going to howl about it.
Going to feel that, right? I mean, judging by the radio call-in show that I was listening to, they're going to notice for sure. Okay, Marissa, did you want to say anything else before we move on?
I just wanted to ask a question. President Trump is also talking about the possibility that federal workers would not get back pay.
Right.
So, I mean, all these assumptions that you're making, Justin, right? The modeling you're doing and the economic impact is based on the assumption that they do get back pay because that is the law. Do we think there's any possibility that could actually happen?
In my opinion, no, for two reasons. One, because of the reason you just stated, it's against the law. It's actually a bill that was signed by President Trump in 2019 during that shutdown that would guarantee that all federal furloughed workers and those who worked without pay would in fact receive compensation for the period of which the shutdown lasted. But then also, when pressed about it, most Republican lawmakers, and including Speaker John Thune of the Senate and Senate Majority Leader John Thune and Speaker Mike Johnson of the House, they basically heard that and they're like, well, we'll probably give federal workers back pay, and so they seem to be much less warm to that idea than the president is. And I think that's kind of like what has been part of the messaging problem in the Republican Party, is that the Senate and the House have largely been, kind of unified around this clean continuing resolution. Let's not, break off too much from that. And then in the White House, you have all these kind of threats being levied left and right. And I think it's making some of Republicans in the Congress get a little bit nervous that the president might throw them off their messaging and kind of lower their leverage relative to Democrats. And so to answer your question briefly, I don't think it's going to be an issue, certainly a risk, but I think a low one.
I just wonder if you're a federal worker and you're hearing this, right?
Yeah,
back to like
right.
what your actions will be. I mean, if you think, I might miss a paycheck on whatever the next paycheck you said was, right? The full one that they would miss. I might miss a paycheck, and now they're saying I may not ever get that paycheck. That could change consumer behavior. That could make people much more willing to just leave and look for another job altogether too.
True.
For sure. True. Hey, let's move on. In fact, I don't think we've ever ended the podcast with the stats game, but I think this is going to be the time that actually happens, because we've already gone on for quite some time here. In the game, you guys want to play the game? Everybody up for the game?
Sure.
I think we should. I would suggest we let Brendan and Justin go since they're guests first instead of me.
No, we always start with you, Marissa.
Really?
Yeah.
They're guests.
What do you guys think? You guys... Yeah,
I bet they have some.
I'm
good
always
stuff.
a fan of sticking to a tradition. So
it's tradition. Let's stick with tradition until we decide not to. But I think it's premature. Maybe a few years from now we can break from tradition. So the stats game, we each put forward a stat, which obviously is going to get a little harder because there's fewer stats out there. But we each put forward a stat. The rest of the group tries to figure it out with clues, questions, deductive reasoning. The best stat is one that is not so easy, we get it immediately. One that's not so hard, we never get it. And if it's apropos to the topic at hand, although it doesn't have to be because we're kind of limited here, all the better. So with that, Marissa. No, you know what? Let's break tradition. We're going to do it. We're going to do it. It's like, this is so painful for me. Oh, my gosh. But we're going to do it. We're going to break tradition. Justin,
I think we should.
Okay, we should. All right.
Okay. My stat is 8.1.
8.1%?
No, say what are the units?
It's a level.
It's a level. 8.1. Is it, when you say a level, it's not like months or something.
Dollars?
It's not months or dollars, but it's closer to months.
Years.
Days.
Days.
Days till something happens.
No.
Days since something has happened.
No.
No, the average length of a government shutdown is 8.
That's what it is. Yes.
All right,
yes.
baby.
Yeah, so we've now crossed that threshold. We're at 10 days. But yes, it's the average days of previous government shutdowns.
And how many have there been, Justin?
There have been. I don't have this number offhand, but I do have it in front of me in a chart.
I want to say 20.
This is our 21st shutdown since
21st. Yeah.
Yeah.
Since
if you include, so like there are some years where there was multiple shutdowns in a year, but that were kind of short-lived. And so all together we get to 21.
And the longest in history was 2018-19, 34 days.
That's right.
34 days.
And that was a partial shutdown.
Yeah,
that was not a full government shutdown. Unlike
yeah,
today,
that's another good point.
Mm-hmm.
Actually, just to point things out, I mean, this is a full shutdown. The 2018-19 was a partial shutdown because the government had already appropriated, as we talked about defense, and I think of a couple of other of departments that gotten their money. The other thing was that was at the very end of the year going into of 2018 going to the next. So it was during the holiday season when work is already, no one's doing any work anyway. Here we're in October, and this is like, people are doing stuff. This is at least exactly. I'm doing stuff.
Presumably.
Presumably they're doing stuff. Presumably they're doing stuff. They're out, they're harvesting the pumpkins. I don't know,
That's right.
Yeah, that kind of thing. That was a good one. All right, Brendan, you're up.
All right. $350 billion.
$350 billion.
Oh, that's the cost of extending the ACA premium tax credits.
Oh, wow.
Look at this man.
Wow, you guys know your numbers.
So yeah, that's what we're talking about $35 billion a year.
Over 10 years.
Yep.
Yeah. And maybe we could use the tariff revenue to pay for it. What do you think?
I mean, right now we're on pace. We're going to get about, $300 billion in tariff revenue. We've already earmarked about $15 billion for the soybean farmers.
Is it $15 billion for the soybean farmers?
I think that's what they're talking about.
Yeah.
The scuttlebutt.
Yeah, $350 billion. Okay. That's just maintain the current ACA premiums, the enhanced so-called enhanced subsidy.
Policy.
Yeah. Right. Okay. That's very good. Good. Not as good as Justin's, but pretty good. Pretty good.
I should have stepped back on that one.
Yeah,
absolutely not.
We never would have gotten it. I was thinking.
I thought it was like cost per day of a shutdown or cost per week or something like that.
$350 billion.
Oh, that'd be huge.
Isn't it per week? Isn't it something like that though? Per
no.
Week?
No.
Month? No.
Nominal GDP is 30 trillion, so 350 billion is over 1%. It's more like 10 billion, something like that. Right? Yeah. Okay.
I mean, if the estimate of 0.1 percentage points of GDP per week is correct, it's 30 billion, but it could be less than that too.
30 billion. Right.
Yeah. Okay. Emersa, you're up.
Okay, ready?
Yeah.
1,029 billion.
$1,029 billion.
Yes.
Is it related to the budget?
Yeah.
Interest payments on the debt.
That's right. That was the interest payment on the debt for fiscal 25. CBO just released their fiscal 25, review. So after Social Security, that's the biggest line item on expenses for major programs.
So for the first time ever, we're over $1 trillion.
Yeah, for the first time ever, right? That's up $80 billion from the previous fiscal year, up 8%. So it was just under $1 trillion in fiscal 24.
Wow.
So yeah, that's more than we spend on the military. It's more than we spend on Medicare or Medicaid individually.
Right.
As we record this, we're going to get the final monthly Treasury statement this afternoon. So we'll get the full fiscal year. And again, it's looking exactly the same as last fiscal year, $2 trillion deficit. Right on the money.
6% of GDP, something like that.
A little bit more.
In the primary deficit, excluding those payments, interest payments, what is it? So I think it's like 3% of GDP, isn't it? Something like that. It's an outrageous number.
Well, yeah, because it's half the deficit.
Yeah, right. Exactly. Yes, exactly. Tricky how you did that. Wow. Very impressive. Yeah, very impressive. Okay, I got a stat, to mix things up. It's just a hint. It has nothing to do with the government shutdown or the budget deficit. It has everything to do with alternative data that we're looking at. And the number is 9.04%. And I can give you another hint that would be very helpful. Does anyone want to take a crack at it? 9.04%.
Is it employment related or labor market related?
No.
Is it CPI related?
Is it credit?
No.
Consumer
Credit.
Credit related?
Credit related.
Yeah.
Justin, you should know this number. You should know this.
It's a delinquency rate. It's got to be subprime delinquencies.
No.
Is it the increase in credit over the month?
No. It's the delinquency rate on
student loans
for the month of September. Student loans 9.04%, highest ever. It jumped again in September. That's outrageous. That's very high, incredibly high. It's double what it was back in in more typical times, like in 2019. We use 2019 as kind of a benchmark, a time when things were reasonably okay and credit quality was reasonably good. It was, I think, 4.5%, now 9%. And obviously representing a lot of stress. And I bring this up in the context of, the alternative data. We get the data, we've talked about this in the past, data from Equifax, the credit bureau, and see from the credit files, exactly what's going on with delinquency and outstandings. And we can break that down by a score band and lots of other different cuts. And you can see the stress there. Here's another really amazing statistic. And thank you, Justin, for sending me the data last night. For auto loans, subprime auto loans. So these are auto loans made to borrowers with credit scores or Vantage scores of below 660. So that's the score. The typical, I think the average score is like 710, 720. So 660 and below. The average delinquency rate on those auto loans is about $450 billion in outstanding. Year to date through September is exactly 10%. And
really high.
Again, very, very high, and the highest, even higher than what we saw in the great global financial crisis, GFC. So there's a fair amount of stress out there, particularly in the kind of the subprime, area for lower middle income households. Okay. Anything else, guys, before we call it a podcast? We covered a lot of ground. Alternative data sources. We talked about the government shutdown. We played the game. I wanted to talk a little bit about the tariffs, but maybe we'll come back to that next week, or we'll get you back on, Brendan, soon so we can talk about that.
I'm curious what your odds of recession are now, Mark.
I put them at 40%.
Really?
Somewhere around there. Yeah, very consistent with our model. We have that model that of kind of a leading indicator of probability of recession over the next 12 months, and I think it's sitting at. Well, time we ran the model, it was sitting at 42%, something like that. Mm-hmm. So you told me 40. I guess, the GDP data is coming in stronger for Q3. We didn't get to the trade data today. That would have been an important variable to get. But I think the Atlanta Fed, our tracker, is coming in strong. So, that brings up something we should talk about in the future. It goes to productivity. We're getting all this GDP growth, but we're getting no job growth. So what the heck is going on? How sustainable? Who's going to win that battle? Is it going to be GDP or jobs? I mean, that's kind of the other way of thinking about this. But I say 40 shaded. If I'm wrong, shaded to lower probability. What about you, Marissa?
I think I'm down to about a third, 35%.
Yeah. Makes sense. Justin, do you have a probability in mind? Justin,
I've been floating between 30 and 40% for about 2 months or so now.
Yeah. See how he phrases that? It's like I've been more right than you guys. 30, 40.
I've been there for months.
I've been there for months. I knew it.
We don't know who's right. Yeah.
No.
So.
Of course, even if you're right, I'll make sure that I'll say you're wrong, so it doesn't matter.
Yeah.
I'll find some way. Brendan, what about you? You have a probability of recession?
Oh, I'm always the pessimist. I'll take the highest odds of the group. 45, put away.
Okay. All right. Well, that's your Canadian prism you're looking through. Yeah, there you go. All right, guys. Well, thanks so much. It will have hopefully Dr. Dority's back here, next week if he doesn't get caught in Bermuda because of the hurricane or air traffic control or whatever it is. But good to have you aboard, Justin and Brendan. Always a pleasure, and thank you for all the information. And with that, dear listener, we are going to call this a podcast. Take care now.